Which of the following best describes the principle of utmost good faith in insurance contracts? A. The insurer must disclose all terms in plain language. B. Both parties must disclose all material facts truthfully and fully. C. Only the insurer has the obligation to be honest about the policy terms. D. The insured is allowed to withhold information that may affect the premium. The correct answer is B. Both parties must disclose all material facts truthfully and fully. Explanation. The principle of utmost good faith (ubera fides) means that both the insurer and the insured must act honestly and disclose all material facts. In the context of insurance, this principle ensures that the insurer has all relevant information to assess risk appropriately. Non-disclosure or misrepresentation by either party can render the contract. Which of the following is not typically considered? A type of general insurance contract. A. Home insurance. B. Travel insurance. C. Term life insurance. D. Motor insurance. The correct answer is C. Term life insurance. Explanation. Term life insurance falls under life insurance, which is distinct from general insurance. General insurance includes non-life products, such as motor, home, liability, and travel insurance. These typically cover risks over a short duration, are renewable, and indemnify the policyholder against specific losses. At what point must insurable interest exist in a property insurance contract under general insurance law? A. When the premium is paid. B. At the time the policy is issued. C. At the time of the loss. D. When the claim is submitted. The correct answer is C. At the time of the loss. Explanation. In property insurance, insurable interest must exist at the time of the loss. This ensures that the policyholder suffers a financial loss due to the damage or destruction of the insured item. Without insurable interest at that moment, the claim will not be valid even if the person had an interest at the start of the policy. What is the legal term for the right of an insurer to recover the amount paid in? A claim from a third party responsible for the loss. A. Contribution. B. Subrogation. C. Indemnity. D. Warranty. The correct answer is B. Subrogation. Explanation. Subrogation allows an insurer, after compensating the insured for a loss, to recover the amount from a third party who is legally responsible for the damage. It helps prevent the insured from profiting from the loss and ensures the principle of indemnity is upheld. In contract law, which of the following is not one of the required elements for forming a valid insurance contract? A. Legal capacity. B. Proposal form. C. Offer and acceptance. D. Consideration. The correct answer is B. Proposal form. Explanation. A proposal form is a tool used to gather information from the insured but is not a legal requirement for the formation of a valid contract. The essential elements of a valid insurance contract are offer and acceptance, consideration, legal capacity, and intention to create legal relations. Which party in an insurance contract is primarily responsible for assessing the risk and setting premium terms? A. The insured. B. The broker. C. The underwriter. D. The claims adjuster. The correct answer is C. The underwriter. Explanation. The underwriter, working on behalf of the insurer, is responsible for assessing the risks associated with insuring a person or property. Based on this assessment, they determine the terms of the coverage and the premium to be charged. What does the principle of indemnity aim to ensure in general insurance contracts? A. The insured profits from the insurance. B. The insurer covers only half the loss. C. The insured is restored to their original financial position before the loss. D. The insurer takes ownership of the insured item. The correct answer is C. The insured is restored to their original financial position before the loss. Explanation. The principle of indemnity ensures that the insured is compensated for the actual loss incurred but does not profit from it. This maintains fairness and prevents moral hazard. The compensation may be in the form of repair, replacement, or cash. What does the concept of proximate cause help determine in an insurance claim? A. The premium payable by the insured. B. The legal capacity of the insurer. C. The actual cause that set the chain of events in motion leading to the loss. D. The length of the policy term. The correct answer is C. The actual cause that set the chain of events in motion leading to the loss. Explanation. Proximate cause refers to the dominant effective cause of the loss. It is used to determine if the loss is covered by the policy. If the proximate cause is an insured peril, the insurer is liable for the loss, even if non-insured causes follow. Which of the following rights does A consumer usually have, after purchasing an insurance policy subject to regulation: A, the right to withhold claim information; B, the right to change the beneficiary at any time; C, a cooling-off period during which the policy can be cancelled; D, the right to increase the sum insured without notice. The correct answer is C, a cooling-off period during which the policy can be cancelled. Explanation: most insurance policies come with a cooling-off period, often 10 to 14 days, during which the policyholder can cancel the policy and receive a full refund provided no claim has been made. This allows consumers to reconsider their decision without financial loss. In the event of a claim involving multiple insurers, which legal principle ensures that each insurer contributes proportionately to the claim payment? A, indemnity; B, subrogation; C, utmost good faith; D, contribution. The correct answer is D, contribution. Explanation: contribution ensures that when more than one insurer covers the same risk, each insurer pays their fair share of the claim based on their respective sum insured or liability. This prevents the insured from claiming the full amount from multiple insurers and profiting from the insurance. What is the primary role of the Reserve Bank of New Zealand (RBNZ) in relation to insurance providers? A, auditing customer service practices; B, licensing and prudential supervision of insurers; C, investigating fraud in insurance brokerage firms; D, representing consumers in dispute resolution. The correct answer is B, licensing and prudential supervision of insurers. Explanation: RBNZ is responsible for the prudential regulation and supervision of licensed insurers in New Zealand. Its mandate includes ensuring that insurers are financially sound, meet solvency requirements, and maintain risk management frameworks to protect policyholders. Which of the following is a key insolvency protection mechanism in insurance? A, ombudsman services; B, statutory funds or capital guarantees; C, cooling off periods; D, monthly premium deductions. The correct answer is B, statutory funds or capital guarantees. Explanation: to protect policyholders in the event of insurer insolvency, statutory funds or guarantee schemes are established. These funds ensure that insurers can meet obligations to policyholders even if the company becomes financially unstable. Which statement best describes the concept of apparent authority in insurance agency law? A, authority clearly outlined in a legal contract; B, authority based on verbal instructions from the insurer; C, authority perceived by the client due to the agent's behavior; D, authority limited only to claims processing. The correct answer is C, authority perceived by the client due to the agent's behavior. Explanation: apparent authority arises when reasonable person believes an agent has authority, even if that authority hasn't been explicitly granted. It is based on how the agent presents themselves and can legally bind the insurer if not properly managed. Insurance brokers must comply with conduct obligations that include A, offering only products from one provider; B, avoiding disclosure of fees; C, acting in the best interests of the client; D, promoting the most expensive policies. The correct answer is C, acting in the best interests of the client. Explanation: intermediaries such as brokers must adhere to conduct and disclosure standards, including acting honestly, fairly, and in the best interest of clients. This includes disclosing commissions, fees, and conflicts of interest clearly. The cooling-off period in a general insurance contract refers to A, a temporary suspension of coverage during review; B, a grace period to file claims; C, the period in which a customer can cancel without penalty; D, time allowed for insurers to reject applications. The correct answer is C, the period in which a customer can cancel without penalty. Explanation: a cooling-off period allows policyholders to review and cancel the policy, typically within 1014 days after purchase, with full refund. It helps consumers assess suitability and avoid being locked into unwanted contracts. Under the Fair Trading Act, insurance providers must A, use legal jargon in all documents; B, avoid misleading or deceptive conduct; C, accept payments only via check; D, provide coverage regardless of risk. The correct answer is B, avoid misleading or deceptive conduct. Explanation: the Fair Trading Act 1986 protects consumers by prohibiting false or misleading representations in trade. Insurers must market products honestly and clearly present exclusions, terms, and conditions to ensure informed decision-making. Which act outlines insurers' obligations to protect a client's personal data? A. Consumer Guarantees Act. B. Privacy Act. C. Insurance Contracts Act. D. Financial Markets Conduct Act. The correct answer is B. Privacy Act explanation. The Privacy Act 2020 sets the rules for handling personal information in New Zealand. It requires insurers to collect data fairly, use it for appropriate purposes, and protect it from unauthorized access or disclosure. An insurance intermediary's remuneration structure may include A. Interest earned on client funds. B. Bonuses paid to clients. C. Commissions or fees for service. D. Refunds of premiums to regulators. The correct answer is C. Commissions or fees for service explanation. Brokers and agents may be compensated through commissions paid by insurers or fees charged directly to clients. These must be clearly disclosed under regulatory guidelines to ensure transparency and avoid conflicts of interest. A policyholder fails to disclose a pre-existing condition when applying. This is an example of A. Misrepresentation. B. Policy adjustment. C. Accidental cancellation. D. Coverage waiver. The correct answer is A. Misrepresentation explanation. Failure to disclose relevant facts like pre-existing conditions constitutes misrepresentation or non-disclosure. This can lead to claim denial, policy cancellation, or even legal action, depending on whether it was intentional or negligent. Which of the following situations is most likely to be considered an unfair contract term in a general insurance policy? A. A clause clearly outlining premium payment frequency. B. A term allowing only the insurer to change coverage without consent. C. A clearly explained deductible for claims. D. A condition requiring policyholder contact for renewal. The correct answer is B. A term allowing only the insurer to change coverage without consent explanation. Unfair contract terms are those that create a significant imbalance, are not transparent, or cause harm if enforced. Giving sole discretion to the insurer to change terms without mutual agreement is considered unfair and unenforceable under consumer protection laws. What is a legal obligation of insurers when processing general insurance claims in New Zealand? A. Delay claims to assess premium frequency. B. Process and decide claims fairly and within a reasonable time. C. Reject all claims over $10,000. D. Act only after FCL intervention. The correct answer is B. Process and decide claims fairly and within a reasonable time explanation. Insurers must comply with obligations under the Fair Insurance Code and common law to ensure that all claims are handled fairly, reasonably, and without unnecessary delay, ensuring consumer trust in the claims process. What is the main function of Financial Services Complaints Limited FCL? A. Monitor advertising standards. B. Provide a free and independent dispute resolution service. C. Set premiums across the industry. D. Enforce the FMAL's financial advice regime. The correct answer is B. Provide a free and independent dispute resolution service explanation. FCL is an external dispute resolution (EDA) scheme that helps resolve complaints between consumers and financial service providers fairly and at no cost to the consumer. Under AMLCT legislation, what is the first step in customer due diligence? CDD. A. Verify the customer's identity using reliable documents. B. Transfer client funds immediately. C. Report all transactions to the ERD. D. Wait until claim is made to verify identity. The correct answer is A. Verify the customer's identity using reliable documents explanation. Customer due diligence (CDD) requires insurers and intermediaries to verify the identity of the client using independent, reliable documentation before engaging in any financial service per the AMLCT Act 2009. Which document is required to outline the rationale and details behind financial advice? A. Statement of advice (SOA). B. Product disclosure statement. C. Underwriting agreement. D. Client satisfaction form. The correct answer is the Statement of Advice SOA explanation. A statement of advice SOA provides clients with a written summary of the advice given, the basis for that advice, and any conflicts or commissions. It is required for transparency and compliance with the Code of Professional Conduct. Which of the following is a typical remedy offered by the Insurance and Financial Services Ombudsman? If so, A. A legal order to fine the insurer. B. Compensation for financial loss or correction of unfair treatment. C. Suspension of an advisor's license. D. Mandatory arbitration in court. The correct answer is B. Compensation for financial loss or correction of unfair treatment explanation. The IFSO scheme provides non-binding remedies such as financial compensation, corrections, or explanations aimed at resolving disputes between clients and providers in a fair, efficient, and accessible way. What does the best interests duty require of financial advisor? A. Recommend high commission products. B. Act in the client's interests above all else. C. Only advise clients with long-term policies. D. Defer decisions to the insurer. The correct answer is B. Act in the client's interests above all else. Explanation. The best interests duty under the FSLA and Code of Conduct means an advisor must place the client's goals and needs above their own or their employer's, ensuring ethical and appropriate advice. What must happen before a consumer takes their complaint to SEL or IFSO? A. The insurer must be taken to court. B. The client must go through the internal dispute resolution IDA process. C. A 30-day cooling-off period must pass. D. The client must consult a financial planner. The correct answer is B. The client must go through the internal dispute resolution IDA process explanation before escalating a complaint to an external dispute resolution body. The consumer must first allow the insurer's internal complaint process an opportunity to resolve the matter within standard time frame, typically 2 months. How are insurers expected to manage amorphed risks under the law? A. Apply identical checks to all clients. B. Implement risk-based compliance programs tailored to business exposure. C. Report only overseas transactions. D. Ignore small transactions. The correct answer is B. Implement risk-based compliance programs tailored to business exposure. Explanation. A risk-based approach requires insurers to identify, assess, and mitigate money laundering and terrorism financing risks depending on the nature, size, and complexity of the business and client relationships. What is the industry's responsibility in addressing emerging climate-related insurance risks? A. Stop providing cover in rural areas. B. Raise premiums without disclosure. C. Integrate climate risk into governance, underwriting, and disclosures. D. Wait for legislative changes before acting. The correct answer is C. Integrate climate risk into governance, underwriting, and disclosures. Explanation. New Zealand regulators like the RBNZ and FMA expect insurers to recognize and disclose climate-related financial risks and ensure they're reflected in strategic decisions, underwriting models, and reporting. What must advisors disclose under the Code of Professional Conduct for financial advice services? A. All competitor fees. B. Conflicts of interest and commissions. C. Company's future profit targets. D. Expected premium hikes over the next 5 years. The correct answer is B. Conflicts of interest and commissions. Explanation. Advisors are legally and ethically required to disclose any commissions, incentives, or relationships that could influence their recommendations. It supports transparency and helps clients make informed decisions.